Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, May 6th, 2008. As we get into today's video, we're going to talk a little bit about the turn date we're in the midst of right now and discuss how that affects the overall market and where we're going to head. And this is going to be the key in this video, folks, is because as we continue to make this top on this turn date in the markets, and you're seeing the top forming now, as you've had a reversal on Friday where we actually gapped up and closed near the lows of the day, and then you saw a down day yesterday, now a little move up to the upside today. What you're seeing is the turn date coming to fruition. All right, and that's the beauty of it. You're seeing that top being put in the markets in our estimation, and the setup for a fall in the markets coming. So again, we're going to look at that and see how that affects the overall market conditions. How does it show us that we're going to be falling in the near future? Does it show over the next couple of weeks where this is going? And we're going to continue to do our analysis to see where that heads. But as we saw today, the markets had a little bit of an up move. You saw basically the markets, the Dow, the Nasdaq, the S&P recapturing what they gave back yesterday in an attempt to shift the psychological nature of the market back to a more bullish nature so they could actually drop it later on. And that's going to be the key, guys. And you're going to continue to see that psychology, along with price pattern time, plays an intricate role in the overall market moves. And psychology on the near term is becoming more and more of an issue. All right, and what do I mean by that? Well, the amateur is especially the trader, is getting whipsawed more and more and not understanding the differences in the moves and the psychological levels of the market and how to take advantage of that. So we'll go into that today. Obviously, we'll discuss that. But needless to say, you saw the Dow up about 51 points today, the Nasdaq up about 19, the S&P up about 11. And let's take a look at the intraday charts on this market. Now, the beauty of today's market was that we actually were selling off into the open after coming down yesterday, and that was a perfect opportunity for them to catch some of the shorts off guard and shift people's perception to possibly a more bullish stance. And what you see here is a shift down in the markets for a majority of the early morning hours, even before the market came to open. And then basically right on the open, and look at this, it almost happened to the tip of the market opening at 9:30 a.m., you saw the markets moving up strong. And the markets really got a nice move up all day. You had small pullbacks here and there, a little bit of a pullback to the 20 here, a little bit of a pullback there, but for the most part, we stayed in a channel all the way up all day. All right? And you can see that channel basically illustrated here by what I'm drawing in now. And I'm going to erase this line so we can actually see it even clearer. And let's see, there we go. And here you can see the channel that the market was in. So you had a market channeling all the way up all day on light volume, again, in the market. Volume was a little heavier than yesterday, but overall it was still very, very light, which has been something that really has worried us quite a bit. Because what this is showing is that not a lot of the institutions are playing ball with this market. It's a lot of the little guy pushing it up, a lot of the light volume, and we fear that the institution is letting the market settle up here only to sell into the amateur. And that is what looks like to be happening as we top out here, and we have these little blips up and down in the market. A blip like today, where we shoot up a little bit in the markets, is a perfect opportunity for those institutions to unload into the little guy who says, oh, the market's moving to new highs, let's buy into this market. And sure enough, who are they buying from but the institutional players and the big money hedge funds as they unload. So that's the key, and you've got to be careful of that. And it's so understated in the markets, and we feel in MoneyStocks.com that this is one of the key perceptions that all individuals need to understand, at least from us. And that's what we try to bring these videos to you guys, so you can really understand the psychological aspect of things, the pattern, price, and time, and put it all together and understand not to get whipsawed out of the market. What we're going to look at now is the daily chart of the SPY, and we'll flip over to that quickly here. And there we go. There's the daily. So again, I'm going to switch in here, and we're going to throw the 200 moving average in because it's important for us to get that 200, because that's also a resistance area, a heavy resistance area right above. But here you can see on the daily, and this is the key here, folks, is that we had that strong move up, which was the last move we were expecting in the markets. And then you had the gap up the next morning and a reversal, and you see how we have a red candle there, and then the following Monday, which was yesterday, the move down in the markets, and then the reversal on the gap down. And this is what's called the whipsaw of the top. This is what topping patterns are. All right, you see whipsawed in a tight range. It can often be in a sideways move, but you're getting up and down moves, And every time the market moves down, the shorts say, oh, yes, this is it. And every time the market moves up, the longs say, oh, this is it. And the bulls and the bears kind of go back and forth, juggling for position, trying to figure out which way. And every time the market goes up, there's some weak-handed shorts and amateurs. I know a lot of them out there that get whipsawed out of the market. When it goes up, oh, it's going to go long, let's go long. And as soon as they go long, the market whipsaws back down, and they get whipsawed out on the downside. So this is the way that they get basically, penny, nickeled, and dimed for gains, and they take small losses on each way, trying to figure out which way, when really what the market is doing in this pattern up here is putting in a topping area on our turn date, as we talked about. So it's, again, the turn date being a topping pattern in the market prior to a move down, and that move down could come any day. There's no stated fact that says you basically have a 1, 2, 3 and then a drop or anything like that. It could be tomorrow, it could be next week. We don't really necessarily know. All we know is that the turn date is in these 3 dates where you're seeing a topping pattern put in, and we'll continue to look. Does it continue to top here? Do we touch the highs from Friday again to double top there? Do we even possibly break it to cause a little bit of a long jump on board where the longs say, oh, this is it, we just broke Friday's high, we're going higher, and then it reverses to the downside? Or do we not even go near there anymore, and do we just start selling off? It's all possible. The one thing you have to note here, this is what we're seeing here, is this is a topping pattern in this market. The turn date, which is a turn date definition, is a shift in polarity, and I think I should explain that. A shift in polarity basically states that an up move tops out, and then the down move follows. So you're shifting in a polarity where, let's say you're driving north, which is driving to the North Pole, and you say, you know what, I think I want to go to the South Pole. You have to kind of do a move and turn your car around, and it's not just like you just can't drive backwards and just the whole way. You got to turn your front around and start heading south again, and that's what basically this turn date is setting up for, the topping pattern in the markets, and it looks to be intact. Although we'll continue to watch, because frankly, there's no law, there's no set thing. This is what we are seeing, as I always say, and you should always consult your financial advisor before making any decisions. But again, this is what we are seeing. And again, just to talk about the polarity, keep in mind that it's a choppiness in the markets topping out. All right. So as we look at the SPY on the daily, you can just see the monstrous move we've had in this market. And I'm going to show you some other weaknesses out there in the market that we've been seeing. And those of you that are interested, what happened today, folks, was a move up on basically alternative energy, oil, gold, basically anything to do with the dollar today was up. And I'm going to show you the dollar, the UUP, as we always talk about the UUP as being something good to follow. Now, on the daily UUP, you saw a little bit of a pullback, but notice it's coming right into this necktie, all right? You're having a pullback. You actually touched the 50 moving average today. It's very possible this is consolidating for another move up. Well, what happens if we move up again? Just like on the last call where we had called out the DUG for a play, and it had moved up beautifully, and we had said go short Halliburton and Schlumberger, and it worked out beautifully. The next day, you had a beautiful drop, about $3 in oil. Now you've moved back up on oil, and look at the USO today. Beautiful move, possible M pattern, topping pattern, and a possible double top formation here. So we're watching this very, very carefully. Very, very carefully. We're going to have to continue to see, is this an M pattern top with a double top here? Do we reverse down, or do we have a little more to go? I mentioned this in yesterday's video. We are very, very close on this. This is getting to very, very interesting here, and it looks like oil could be nearing a top. And if the dollar starts to strengthen again, in our estimation, you should see a drop in oil, a very fast drop possible. So again, we'll continue to watch that, but oil was up again today, and the USO was up $1.46. Now, the interesting thing is that gold really has stalled out here. You're now looking at the GLD. Now, here's the GLD top way over here, and look at the drop. I mean, you're talking still, even though gold has bounced nicely over the last few days, you're still talking about an ugly drop from basically $100 on the GLD back to 86.5 right here at this point. So it's a very interesting divergence here of oil and gold, and a lot of that can be contributed to now people's perceptions of the overall market as being more bullish. All right, they say, okay, the U.S. economy is not necessarily going into recession. This means U.S. is going to use more oil. U.S. is the largest, consumption player of oil, and in tune with that, you're having oil actually diverge from gold and the dollar in many situations and continue to move up this way. But again, that will only last so far. As we estimate that this market will be brought back into reality, so will that idea of oil just needing more and more. Because let's face it, folks, the market is not out of it. Those of you that are out in the world, in the real world, we understand that whether it's food prices or gas prices or the overall job losses out there, it's pretty ugly out there. We are, in my estimation, to be in a recession already, even if the government won't admit it yet. But listen, it's these numbers that the government puts out, it can be fudged very, very easily. And I'm not saying that it happens, but I wouldn't be too surprised either. So in any case, folks, keep this in mind: is that gold has diverged, and in my opinion, in my humble opinion here, you are going to see oil come back down relatively soon, although it could go a little higher. USO probably has its eyes set on $100. The even number play. Those of you that are in the chat room know about that. All right, so keep a close eye on that. Just to go back to the NASDAQ, on the daily, same thing going on here. You're seeing the topping in the NASDAQ happening now from our estimation. You should see a fall in the overall markets over the next 3 weeks, and we'll continue to follow it very closely. Have a wonderful day. We'll talk to you all tomorrow.